Hey traders, Nick Shaheen here, recapping 917 action. And action probably understates it. Fed day, event day, I should say. All rhymes. I'll try to keep it short to half hour. I know 45 minutes yesterday was a little long, but I didn't want to cut away at corners. So today I'll speak a little faster. So the event in the morning is CPI, which is inflation, came in line actually a little better, a little lower than anticipated. So that was a cause to pop. That was one part of our scenario, correct? And then we also, the second part was the Fed. What will they say? And everybody's hanging on the one statement, the really long time statement, keeping rates low for a really long period of time. They left that in, but they added a whole bunch of new stuff, so it created confusion, and markets bounced all over the place. They first reacted up, then down, then up, and then down a little bit, and then up a lot. So you can see that right here. This is the SPX. That's the easiest one to see. Earlier in the day, within like 20 minutes, that red arrow, I put it where I said, okay, now we're squeezing the entire day, and there's going to be a violent move here. And if it coincides exactly with the Fed statement, then the reaction will be exaggerated. So this reaction, as big as it was, it probably would have been bigger. And we were almost to the dollar. So the event popped down, popped, meandered, and then decided to run it up to 2010, 2011 almost, and then into the close. My opinion, my interpretation of what happened to the Fed. We'll go back to levels in a second, but let's see what the Fed said and didn't say. Okay, my interpretation. First 10 seconds I could have stopped watching and I'd be just fine. She said no change in anything basically, and that would have been it. And then the conditions that will cause her to raise rates. She's looking for maximum employment, which is also better, utilization, which is improving, participation, which is better. So basically there's progress, is what she said. And then she said, but we're not at the goal, maximum employment. So it's important that she said we're not at the goal. It's even more important what she said next. She said that the current condition of the recovery keeps us on track for hitting the goal. So she said, yes, we're not at the goal, so we're not raising rates, but she said, if nothing else changes with whatever is going on right now, we're on our way to hit our goal. So basically, we're on cruise control and closer than people realize, in my opinion, because we're on cruise control and she doesn't need to fix anything, and we'll be at our goal. Then the next idea that came out of this speech and the questions is that inflation is the objective. She's no longer worried about deflation. She said we're not at the target, but she's no longer worried about inflation going down and not being up and staying down. This is the problem in Japan. They have deflation, so they have to keep pumping QE. So here she's saying she's not worried about deflation, therefore there's no QE coming, no surprise QE. And that was like the long shot, huge pop that will probably cause me to change my thesis I mentioned in the recap recently. That's not there. So my thesis still stands. That room for up, no major down, so trade the range. And then she talks about she promoted inflation to being the thing to watch for, meaning that it's inflation that is going to cause her to raise the rates. So I got excited that, okay, now we have something to watch. Remember, I was complaining about the fact that we have nothing to watch. Bernanke had something, and then he took it out, and then he promoted inflation. And Yellen has nothing. So, but anyway, so she said inflation, we're watching inflation, it will cause us to raise rates. And then she said immediately threw it out. Immediately threw it out in the same sentence. It wasn't even a period, it was a comma. She said, but we were not opposed to keeping it low, rates low for an extended period of time, way past us hitting the inflation targets, if the environment, data dependent basically, if the environment still, if we still think that we need it. So basically she's saying, I have no idea. I'm going to be reactive to whatever I'm seeing in the data. Data dependent is code for I'm going to be behind the curve. That's the definition of being behind the curve. I'm going to be reactive. So that's my interpretation of Yellen. Basically, no change, still reactive, is going to be late in acting, therefore there's going to be an issue down the line. She's not going to be in control. Inflation may spike, rates may go out of control. Even though she doesn't officially raise them, they might creep up. So that's my 5 minutes to Yellen. Now, action in the market. I mentioned the SPX action. I'd like to zoom out after doing this to show you relative to the trading ranges and how correct we were in our recap yesterday. So you can see that we squeezed down and then decided to pop up, and then we developed some sort of a short term, this is about an hour, range upwards. But then right about here, this last oomph from here to here was done on very weak exuberance or underlayment in the breadth of the market. So I did not panic. I was short 2030 next week, and I added some to my shorts. And then on the way down, as soon as it broke that trend, it was off to the races downwards. We broke under 2,000, right? This candle right here, I think, is in the 1900s right there. So the reaction is subdued. It's nothing impressive. Everything went right, yet they could only muster plus 0.13. Let me zoom out to 15 minutes. I think that'll show. Yesterday in the recap, I said we could have a rounding bottom, and I drew this. Hopefully I drew this because I didn't draw it today, so it must have been here during yesterday. So I was not worried. This was a measured move up there. So I may have drawn it in crayon. But anyway, this was not a surprise. So rounding bottom got us there. I'm not too worried about it. But the important part is we broke out of this downwards channel. So we got to respect that. So we don't completely blindly short everything. But now we have a new set of ranges I'm watching, right? So this and this. A channel up like that, maybe a little higher on the top end. So nothing surprising so far. We're still within the range. 2001, first of the week, I said 2000 to 1950 is the range we want to be at. 2001, we're just a buck over it. Even 2010, we're still $10 over it. So SPX is within range. This is the ES. These are the Qs. This is the NASDAQ. Now, I'm going to zoom out on the same reaction in the NASDAQ, so we don't need to hash out the midday, intraday movements. If I zoom out, the NASDAQ's range was a little more defined, and we were just traveling along the upside, and it debated what it wants to do when it hit the range up, the upside range. It peaked, but then it went exactly to the line. So, decision's still not done there. Remains to be seen. I'm going to leave it on my screen. We'll continue that tomorrow. Small caps, for some reason, they popped, and they meander up at the top, plus 0.5%, plus 0.5%, and then just before the decision, they decided to sink back down with everybody. And then they reacted the same way as everybody. Wham, 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 and then this is the decision of Yellen right here, you can tell. Big, big range. So intraday, it was very predictable, and the range is held, and now we have, we're still looking at the ranges. I don't think we ever looked at the ranges for these guys because, except for the fact that I posted a, where did we close relative to that important level? Okay, this right here, that little thin red line right there is the, if I zoom out, it's the level I said it's coming to play. I think I posted it earlier today. So guess what? We closed just at it. Let's call it at it. Call it even. So if let me zoom back out again, I'll tell you why it's come back into play from, I think, early August. This is 30 minutes already, so I'll go to an hour. Actually, yeah, mid-August. It was an area from which it bounced up, and now we're revisiting it. Broke down and revisiting it again from the downside. So will we pop over it and use it as a bounce level again, or will it become resistance again? That's the question. I'm going to leave it up so I can remember that tomorrow. Apple was in its own little Idaho. Did I zoom in on it? No, I did not. So let's look at the 5 minutes. It's important. We sold it off and then we bounced right back, and it did not lose steam like the rest. So we're still working on a nice uptrend, and the range is still predictable. I have not traded it. Google, nice bounce in Google. Enough said. I know a lot of members along it. I'm very happy about that. So this is the big picture, and I'm going to cover what I expect tomorrow. So somebody asked me earlier today, what do you expect tomorrow? More rip. So tomorrow we have another event, Scotland. I think time-wise, somebody said that it could be tomorrow, gosh, I can't remember now, mid-afternoon or something like that. So it is tomorrow for us, and we might know something about it, whether they're going to sever or not. And I think there is a potential for a pop if they decide to not sever. And there's a potential for some uncertainty, so drop, if they do decide to sever. Like I said, I just don't see the big implication on the drop financially globally, but I think psychologically creates uncertainty, and asking who else is gonna do the same to their owner or papa. So tomorrow we should come into tomorrow with, if I look at the scoreboard alone, plus, 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 green, green, green on everything, then we should come into with some positive momentum. But having looked at the intraday and how we closed week, maybe it's negative momentum. So since I don't know, I will wait for the verdict until I see the open interest tomorrow, and I'll tell you where today's trades left us within the expectations of the open interest. So tomorrow I'll be able to give better forecast. But the overnight sessions will be telling. How nervous is Europe tomorrow? I'll be looking to see what Europe is doing, and that'll give me a telltale sign on Scotland, and maybe the US will follow. And they usually tend to follow Germany. So because for some reason lately we've been following Germany on the pre-open. But this will only be for the open. After that, the market dynamics in the US will take over, unless there was a definite game changer. So that is tomorrow, and then Alibaba the day after. Is it the day after? What is today? Wednesday? Yes, the day after. Alibaba IPO. More uncertainty, but it should be positive. So today, the slide at the end of the day makes me think that we might be influenced negatively into tomorrow's open, but not by big time. We do have some economic news, but who cares anymore, I guess. And I had a few questions today. A few things came up throughout the day that I'd like to discuss. One was the momentum stocks. They were all beaten down hard. Some bounced, but they're still mixed. Tesla green. There are a whole bunch of CMG was really bad. 642 I think was the low, and then it bounced back up like $10, $15 higher. So wild momentum stocks. Now you know why they're called momos. By the way, mid caps are red. The only index. I just noticed. So when also we had a few pops. FDX, FedEx reported, Street loved it. It was up to 40%, I think. Closed pretty strong, over 3%. Somebody asked, is it time to short it? I have no reason to short it yet. The weekly chart shows a nice trend, and there's no reason to short it right now. And also, I had questions about the importance of open interest. I think they're very important, and I think I'm privileged to be able to read them the way I do, and I'm more than glad to share them with everybody else in a timely manner. It is kind of a secret sauce. Somebody asked me some specifics on how to do it. Anybody can do it. You just need to know, to have a knack for numbers, and to be intuitive with some geometry in space, and just to be able to download the data consistently on a daily basis and have the time to do it. Or you can follow me and take mine. And so it works well. It drives all my trading. It drives my short-term trades, and it drives my what I think the market expects. So for example, it lets me, it's a great tool to gauge the short-term trade, micro, and then the long-term trades expectations. Like, yes, I can see open interest for next month, and that's what the market expects, but I don't trade on it because it's too far out and anything can happen overnight. You know what I mean? So I can theoretically macro adjust based on that, but not specific. Bad price action in Visa and MasterCard. They were both red. They were really red at one point, and I think they both had some positive talks, dividend related, and yet they're sold off. That's not good. So I delay entry there. Tesla still alive. I'm waiting for a capitulation trigger to, so I can telecast, try to short it big time. Let's show you a visual on that one. That's Tesla. Okay, this green line right here Is that Tesla? Yeah. It's a nice uptrend. I'm waiting to see if it's going to visit that and how it behaves. Okay. Just behind that, whoops, somebody asked me about Zillow. This green line right here was support, support, failed, and now this yesterday's candle brought us up to support, and now my question was, how's it going to handle that? Red so far, not good. Also, I can loosely interpret head and shoulder pattern, and if so, then 110 could be at play. So I'll put a line there just for now, nothing serious. Just to remember that, hey, I looked at it one point, and then I can kick myself for not shorting it. But I won't short it just based on that. I want to see what it does with that green line right here. Okay, that is Zillow. And what else? I'm scanning through a list of things that I wanted to cover here. We talked about RUT, how we can short. I had questions on that, and credit call spreads is the best way to do it. But the data this week was so wonky, that and the IWM. The open interest gave me not much in the IWM. It gave me two extremes, 110 and 120, and then the open interest magnet in the middle at 115. Guess where it closed? 114.73, but nothing specific, so it's too elastic. I can't trade it on the weekly basis. Just to revisit the trade that was on the books for the portfolio, it was 125, 126 IWM vertical for November. It's still cheap to close and book some profits there. I know they're small, but hey, they pay the bills. There's every profit is good. Also, they wanted to talk about wind resorts. It's been pretty wild lately. We talked about it recently. This down channel I don't like, but today's candle is pretty positive. Yesterday's candle tested the bottom end of it, was terrible. So this is a good bounce in the face of a terrible. I need to see how it handles the upper end. So how high, I mentioned that earlier before the open too. How high are they willing to take it within that channel is telling. If they don't go up too high and they try to bounce on the bottom again, you know, the trouble is not done there. So I can't enter it. I can cautiously take a credit put spread somewhere lower, leave a lot of room, provided I don't include a reporting period. This is a reporting period, so I find out if it's going to fall into October. I won't do an October spread because I do not want to hold it through reporting period. I may do 2 weeks before October. Why 2 weeks and not one? Because 2 weeks will give me a escape hatch. If something happens to that, I can move it to the week following and try to get out of it. Whereas if I do it 1 week prior and then something happens, I need to move it, where am I going to move it? I'll end up holding it through earnings, which I don't want. Oh, there we go. 1024 is, chances are, is not included in the October, but double check. That was win. CRM also was another question that came after the I have not looked at it in a while. Look at all my boxes. That's crazy. Okay, so CRM, obviously a Momo stock, and obviously big candles all over the place. I used to trade it until it split. Once it split, the premiums got to be too much of a hassle. Now, if you want to learn about dojis, today's candle in CRM is a doji. I don't know fundamentally what's going on. Whoops. Let's get that out of here. That's not what I meant to do. But a doji, I mentioned it the other day, and that is indecision at its best. You can't even see it. So the market is indecisive. They had no idea. They sold it, they bought it, and then they closed it where they sold it. Still looks heavy. And I wanted to see how it reacts within these two blue lines. Up, bottom, top. If they go revisit the top, then they may be deciding to go up and break out of it. And if so, well, you know what? This is loosely interpreted as a cup and handle. Let me see if I can do this real quick. My cheap way of showing you. Thank you, Windows. You know, I don't know if that can be a handle or not. But if this is correct, then the target should have been up here. But anyway, so how they behave here is really important. If they don't come back and revisit the lows, maybe a credit plus spread can be played. Until then, I'm just not that gutsy. And if you really like it, then the debit call spread is a good way of participating. Okay, there was another one. I'm trying to remember. Cree. Never traded it. And now I know why. That is an awful looking chart. I have no reason to participate in that. Technically, I mean, what can you say? Nothing. I can't say anything. This is awful. Sorry if you hold it long, because, and if you've been averaging down, dollar cost averaging, you've been losing money. This is like almost web van. What's going on fundamentally? I don't know. So this is about the only thing I can draw on it right here. And if it ever decides to come back to 48, maybe it breaks out of it. Maybe if I go to the weekly, maybe I can get a little smarter there, eliminate some of the noise, not see, Cree. This is a 12-month weekly. No, same story there. Maybe if I'd expand to 2 years, give us an idea of what happened when. Ooh. Whoa. What's up with these 3 candles? I have no idea what went on. Okay. I don't know. I can't give you any intelligence. I'm sorry. If it does, like I said, the smartest thing I could have said is, I already did, if it gets to here, then you have a chance of a breakout from this descending wedge. Until then, I don't know. I mean, it could be headed. If you want to take a gamble on it on the long side, it did bounce off that level, and it has done it before. So maybe it repeats it. Does that extend to here? No. But anyway, those are the special requests that I missed last night. They came in too late. We talked about Apple. Oh, did I read something that said that basically, I read something that kind of hints towards uncertainty. One of the uncertainties, Ukraine. It seems like the can has been kicked down in December. Not sure. But something about special status, Eastern regions, but then they decided to not make the change until they made some change pursuant to that, and then they decided to not vote on it until December. So we might have quiet from those fronts until December. So I made a note to myself to remember in November that we might have some Ukraine issues in December. Just a note. I should remember to turn off these phones. Insane. Okay. One of these days I'll remember to shut off everything, close every door. But anyway. So we looked at a few names, and I promised I'd keep it short, but I'm running under. So I'm going to go through my list and see if I missed anything. CMG, we already talked about it. FDX, talked about it. Zillow. I took a vote kind of quickly as to what do you guys like, a video review or a printed review, and the video review seemed to have been more positive. So I'm going to stick with the video reviews whenever I can. I can't promise I can do them every day. I wanted to cover something like a in-the-money arbitrage. What does that mean? As somebody asked me about it, is time has a value, correct? So if there are 3 days left on a trade, and let's say Apple, if I knew that Apple was going to be at 101 for over 100 in the next 3 days, I can buy something that's in the money, like a debit call spread that's in the money already. Let's say $1 spread at 99, and it won't be priced at $1 because there's still time and things can happen, and Apple can drop down below 100. And so you can buy it at a discount basically. Let's say I pay 70 cents, so there's still 30 cents to be priced in with time. I can buy it and sit on the spread, and if I'm right that Apple is going to be above 100, then I collect those extra 30 cents just by time ticking. I call it arbitrage. I've used it before, but not all by itself. I've always used it as a hedge. If I'm short something, I do that. This way I'm risking some cash, but it's fairly safe because it's already in the money and time is not working against my asset. I'm getting away from that word. I dislike buying assets that are depleting, meaning I don't like to buy debit spreads. But in the money debit spread, it doesn't deplete unless price runs against you, because time is on your side in that instance. Because as time ticks, there's a less likelihood of price going out of the spread and pricing it out of the money. Make sense? That's the quick answer to arbitrage. Maybe I'll do a whole set of lessons based on that alone. Also, I'm not trading Apple, but if you do have Apple stocks, you can generate your own dividends and protect your own stock almost for free. If you don't know how, let me know. That's it. I'm going to cut it at 25 minutes. But before we go, I just want to remind everyone that not to chase the ups or the downs, because this market is uncommitted and uncertainty reigns, and they're just it's almost like they're children running around. I mean, the evidence of this is just watch CNBC. I mean, I turn it on just because I want to get a beat on sentiment and what people are saying, and the stuff I hear is insane. I mean, it's like today somebody said certainly, and then in the same sentence he says probably. Well, it's not certainly or probably. It's you're either certain or you're somewhat certain. You can't be certainly said for sure and then maybe. So and everybody toots the same horn, and now they're saying, well, is it time to start pricing in the fact or making preparation the fact that the rates are rising? What did she say today, she Yellen, that was new? We knew they were raising price. I mean rates. She didn't say anything new today, yet now they think this thing, oh, maybe it's time to, she actually asked that question, and I forget her name. Actually, I don't know her name. CNBC host, the tall one. I don't know her name. So anyway, so Kelly, for some reason, pops into my head. Don't follow their advice. Listen to them and fit it within your own perspective. And if you don't have one, follow enough people, get enough opinions, mine included. I'm not always right. I'm not saying I'm right, they're wrong. At least I have an opinion and I can back up my thesis by reasoning, as opposed to just open my mouth and blab based on price action. So make up your own opinion or subscribe to somebody's opinion with which you agree, and then see how price is moving and see if you need to adjust your trades accordingly. So don't be afraid to make up your own opinion. I used to, in my younger years, listen and read and try to follow this guy and that guy and Buffett. And, it's your money, your situation, completely different than anybody else's. You just need to develop a thesis. So that means you got to make up your own opinion. And that means that you have to need the courage and maybe subscribing to some news and feeds like mine that actually helps you gather that information. So I don't get all of my opinions from one bucket. I have my fingers in so many buckets that I collect all of it, and I digest it, and I make my own opinion, and I talk it out loud like we're doing right here. So sometimes me talking, explaining something to you immediately becomes evident to me. It's like, oh, wait a minute, I was so right, or no, wait a minute, I was so wrong, or wait a minute, I didn't even see this. And now, like this morning, this level right here, I hadn't noticed in the small caps until I started doing one of the recaps, and I wanted to see a different slice of time. And boom, like, oh, what is this all about? And I go revisit when I started it and what I need. I made a note on it to see what it was, and then I was like, okay, it's back into play. What are we going to do now? And I guess now we know. We know that we still don't know. So play it safe. You don't need to trade every week. You don't need to trade the lines. I didn't trade this week. I closed this week's trades last week. I left money on the table, but I slept better. Okay, and I have a trade for next week, and I may close it tomorrow because I'm going to sleep better. There's no need. You can't eke out every penny out of every trade. One of the members today, I'm so happy to have seen him do it. He's usually very active, and he came to me and he had a trade today for 2010, 2015 SPX for this week. And he asked what I thought. I said it's too tight for my for my taste. I'd rather fight the fight at 2030 next week than 2010 this week. A, it's higher up. B, more time, so it moves slower. More time for me to react. So just before the spike, he said, I don't like the way this is playing, and he did actually close it and tell me I closed it, and I was so happy to read it. I was like, wow, I'm very impressed. That was good discipline, and that's why we should. I don't even think he closed it at a loss, and even if he did, that was the best loss, because he would have gotten under heat and he would have had to close it at 2010 when prices were there, and if he got scared of it. So he did the right thing. Whether it was the perfect thing, hindsight or not, it doesn't matter. It was the right thing to do, and it should be done every time. Even if it costs you money here and there a little bit, it averts the big giant money dump in one time. So that's how you can say that if you have a 90% success ratio in credit spreads, they inevitably you'll get somebody to say, "Oh, that one, that 10% will wipe out everything else." No, it won't, if you actually move soon enough. So anyway, sometimes you can't because you get engulfed pretty quickly, but most times you can avert it. That's it, folks. Talk to you tomorrow. This is Nick Shaheen again, and it's 30 minutes and 44 seconds. Awesome. Oh, leave feedback. Tell me, too long, too short, you missed this, you missed that. I actually need this information to make the service better. Appreciate it. Thank you.